everybody felt bulletproof because the Fed had their back and the Fed was guaranteeing everybody's bets. Well, the Fed has pulled the rug out from under you now. And so, it's not going to go well in the years ahead of us. So by the same token, a lot of Americans have come largely through the abuse of credit, using too much, again, because that was made too easy. A lot of people live beyond their means. So one of the many investment themes I talk to people about is going forward, buy needs and sell wants.
Welcome back, guys. This is Patrick with Talking Hidden Treasures, and today we are talking inside the markets. Inside the markets segment, we've got Chris Temple, and he is the editor and publisher of National Investments, and he has a lot of experience in this market, has done lots of podcasts, done a lot of publishing and talking and writing about this topic. So today, I want to welcome Chris. Thanks, Chris, for joining us.
Hey, Patrick, great to be with you. Nice to meet you, virtually at least.
Yeah, absolutely. It's just been a pleasure because I've been following you on LinkedIn too for a while, and we're going to get into this a little bit later, but I'm especially excited to talk to you about Russia, OPEC, Saudi Arabia. But for right now, let's just take a quick step back and really appreciate where we're at in the current political climate that we have. So currently our political climate, let's just take a step back and let our viewers understand where we are at right now with the dollar and where it's at with OPEC and what's going on in our global climate with the dollar. What do you see happening?
Well, there's two things going on, Patrick. First of all, nobody alive today, as a consumer, as an investor, as a citizen, as anything, has ever known or lived with or operated in a world that was not dominated by the United States of America. The US dollar has been the globe's reserve currency since the end of World War II. Pretty much every major initiative, war, trade deal, whatever on this planet was disproportionately influenced by the US of A. And we're going away from that world. That move has accelerated in a variety of ways in the recent past. Some of it has been overstated. I mean, the dollar is not going to lose its reserve status tomorrow or next week or next year. But we are very clearly going toward a multipolar world. This was a move that was already underway before the proxy war with Russia, before all of these sanctions on Russia, which have become a laughingstock globally. Even Japan, a reliable ally of America, just made a deal to buy more oil from Russia without regard to the supposed price cap. So, one of the macro things going forward that, again, we're in uncharted territory is that we're moving into a multipolar world. And it's going to underscore, Patrick, the fact that we are already in a World War III of sorts. It's not a shooting war. It's going to be a war over currencies, commodities, and who runs different parts of this world. And I hate to say as a U.S. citizen, but we're not going to come out in very good shape as this war goes on.
Yeah, I think I can agree with you there. When we have to, especially the way you said it, you differentiated it currency from money, because there's a big difference between what we see happening with the US dollar versus what we see happening with gold, for example, holding its value, possibly reaching all-time highs here very soon. We're looking at breaking another, 10% more, and we're going to hit all-time highs. So right now we're talking about how valuable these commodities are and how they're keeping their value. But the US dollar is fiat money. It's not real currency, right? So that's one thing that we want to differentiate.
Well, that's true, but you have to say at the same time that in comparison to everybody else's fiat currencies, for some time now, the dollar has been the cleanest shirt in a dirty laundry pile. The dollar is still the globe's exchange. About 60% of all transactions still are done globally with the US dollar, though that will continue to diminish. More importantly, and this is something I think a lot of people misapprehend. Look, I have no doubt, and I may live to see some of this, maybe some of it'll be after I'm dead and gone, but we will have a multipolar world. We will have other countries that have viable infrastructure and investment banks up and running. They will have reserve status for their currencies, but there is nobody on this planet yet to rival the U.S. when it comes to reserve status. And I'll give you an example. Everybody's made a big deal, and not that it's insignificant, it isn't, Patrick, over China and its yuan being used more and more in bilateral trade. Lots of countries want to trot out currencies for bilateral trade. There's a big difference between using something other than a dollar to buy a barrel of oil or a pound of grain and having reserve status. Don't forget that way back in 2016, when the IMF, and there was a lot of controversy about whether this was premature, but some people were paid off. They brought the Chinese yuan into the SDR basket. That stands for special drawing rights. So that did give the yuan some international recognition. And that was back in 2016. Some scam artists out there were saying that itself was going to be the end of the dollar. It wasn't true any more than a lot of other nonsense out today about Biden bucks and these central bank currencies and so forth. At best, these are woefully premature. Yet for all of that, most of the world, even though it wants to poke a finger in America's eye, and you can't blame them, in using something other than the dollar for day-to-day transactions, nobody, for the most part, is going to put money long-term into China yet as a reserve. They do not have a transparent system. Everybody knows that. Nobody trusts a lot of the information they put out on their public companies, their debt structure, and everything. Now, look, it's not going to stay that way. All right. But we need to, be real about how many of these recent developments, excluding the US dollar and trade, how much they matter and how much is being overstated, at least as I see it.
So let's take a step back. One of the things that I'm trying to understand or wrap my head around, we see this friction globally happening right now. It can be quite unsettling, and it can be quite a lot of information to try to digest and interpret and make a plan with. So you have a lot of experience in this field. What are you looking at in terms of silver? What do you see silver and gold prices doing here within the coming months or the end of this year? And I guess I would even second that with, let's say you were a young father like I am, maybe youngish. Let's step back. Come on, maybe I'm not young anymore. I still feel pretty young. I'm about to have another baby here. My wife is pregnant. So, we've got I'm really going to have another young family here. Yeah. What do I do coming up to these months and these years ahead, preparing for inflation as we see the numbers just printing of dollars is just not going to stop, doesn't seem to stop. The inflation doesn't matter. It's not going to stop whether they keep raising the interest rates because they're just going to keep printing more money. So Where do we go?
Well, look, there are two themes that I've been urging people to get their heads around as consumers and investors alike, Patrick. And if you do it and do it successfully, you'll be able to survive what's coming. And perhaps as an investor, make a lot of money, because in the more hopeful of the possible handful of scenarios in front of us, we could have in North America, especially an economic and industrial renaissance with the build out of the green economy, the money people will make with infrastructure and commodities, all the commodities that are in very short supply right now, including silver. Gold, you've got to give it a different attribute to gold, because gold is a monetary asset. Silver really is not. It is more of a industrial metal. And don't forget where silver is concerned too, Patrick, that as the world finally gets its head out of its posterior region and realizes that if we really want this green economy that everybody's pining for, we need to be mining a hell of a lot more copper and nickel and cobalt and all of these things than we are right now. Guess what's a byproduct of that is silver. So I am bullish on silver. Silver's got some good fundamentals, but certainly not the best of the metals. Gold is going to be a different animal. I put out a special issue the end of last year entitled, "This is Not Your Father's Gold Market." And among the things I pointed out, and I've done it recently in a couple interviews, you look at a chart of the Toronto Venture Exchange. All right. The last time we had a decent move for not only precious metals, but for gold and silver stocks, including exploration companies. That last big run peaked in 2011. Today, the gold price is about where it was back then. And the venture exchange is selling for 30% of what it was back then. So individual investors are AWOL. Institutional investors are still largely AWOL. And I laid out the three things that have to happen before gold's secular bull market, which started all the way back in 1971, can have its next leg. We don't have any of those three things yet. We will sooner rather than later, and it may perhaps be months rather than years, depending on at what point the Fed, which has no intention, contrary to what some market expectations are right now, they have no intention of pivoting. They want the deleveraging that has started. They want the bank failures as long as they can be kept at a manageable level. They want the credit contraction. They want lower prices on Wall Street, all in the name of trying to put the inflation back in the toothpaste that they were responsible for squeezing out in the first place. Okay. But the point will come when they cannot do that anymore. And that's what happened at the end of 2008. That's what caused gold to triple in price in under 3 years. We will get back to that ingredient again, or those ingredients again, when Main Street investors join gold bugs and say, boy, these guys are really running a mess. You know, we're going to be like Weimar Germany or Venezuela. And yeah, maybe I better be looking at gold. So look, in my recommendations, we got out of the trading positions that I'd recommended in gold and silver, both not that long ago, near what I think are going to be their near-term peaks. But I've still got a number of individual stocks and stories that I don't care what the prices are short-term. I'm going to love them in 3 or 4 or 5 years.
Yeah, that's a really great perspective, especially as you consider looking down in the future here, where you know that the demand for our precious minerals are going to continue to skyrocket, especially as they continue the green initiative. You're going to need, you're right, more cobalt, more of all of these natural resources that we need to keep mining for. And this is why we talk about
very dire straits, Patrick.
Yeah.
I don't know if copper is, I think it's the worst of all the stories right now as far as how short the supplies are. And, you know, we've got policymakers who have made this whole situation worse, especially here in the U.S., where, you know, Joe Biden thinks we're going to get minerals from other countries, but he's kept a lot of things in check in this country, including in the state of Minnesota, as you may know, 2 of the biggest development-ready projects for battery metals in this hemisphere. Okay. And he's, you know, part of it is idiocy, and part of it is these starry-eyed idealists he's got around him that think that electric vehicles just pop out of some magic extrusion machine and we power them all with fairy dust and unicorn piss. Doesn't happen that way.
Yeah, I mean, it's kind of a ridiculous thing to think about too. When you think about clean energy, now for some reason, uranium is clean energy. So they're going to need uranium just to be able to get these plants up. But they forget that these structures take time to build, and the infrastructure, the transmission lines themselves are made out of copper. They need that copper to get the power from point A to point B, all the way through the distribution chain, from high voltage at the supply chain at the top when you're at the power distribution facility, all the way down to the transformers. Even in the buildings, you need copper. You need tons of copper every time you build any infrastructure out just to deliver the power. So these are the things that I feel like we need to keep our eye on. One of the things I love that I'm doing here with Stock Pulse is we're just keeping our eyes on what's happening, keeping our fingers on the pulse with the supply side as well, because we know the demand is far outpacing our ability to supply it. So mining is our future. Without these precious minerals, we're going to be pretty screwed. So I totally hear you on that. So let's go forward and say, where do you see us in 6 months?
Oh boy.
I know it's a fair bet, but give me a fair. Let's just have some fun with this, right?
We need, I'm going to back up a step, and instead of focusing chiefly on resources, we're going to talk about the bigger macro and economic picture, Patrick. In 6 months, it's going to be more obvious that we have entered some type of a recession. It's not going to be the same as all the last ones. You need to remember, and my current issue, I start off with this subject. You know, a lot of people have pointed out that there's a statistic called M2. It is the broad money supply that the Fed publishes. It is down about 3% year over year as of right now. And a lot of people are saying that's a harbinger. Oh, we're going to have recession and deflation right away. We're still going to get some of that, but not necessarily right away, because remember that in the 2 years prior, to this last year. M2 in 2 years increased by a third. A third. That's many, many, many trillions of dollars. And in turn, all of this free money that was thrown out there in the name of, protecting us all from the pandemic and making up for people's paychecks they weren't getting and stuff like this. This is the biggest reason why we have the inflation in everything we do right now, was because of all this money printing. So a lot of that liquidity is still out there. It hasn't vaporized yet. It's going to over a period of time. So my view, Patrick, is this, that by and large, my base case is that we are in store for another 2008 type episode. It's already started. But one of the many differences between this present time and in 2008 is, number one, it is likely to happen over years and be with us like a slow, dull ache. It's not going to go away in a few weeks. And part of the reason it's not going to go away in a few weeks is that another big difference between then and today is the Fed is not going to panic and run up the white flag and go into reverse and start quantitative easing all over again and start lowering interest rates. As I said earlier, and it's an entirely different subject, which we won't get into today, as to whether we should even have a Federal Reserve and the kind of system that we have. But given that we do, unfortunately, they see that their least bad choice, the least bad choice of a bad lot, is they want to manage a multi-year deleveraging and undo a lot of the mess that they've made. Now, are they going to pull it off? Probably not. The Fed does not have a great history of either economic projections or soft landings or anything like that. And people that follow me, I don't know if you've gotten to see this yourself, Patrick, but my great cartoonist does a lot of good stuff for me. And one of them, he shows Jerome Powell and others playing this game of monetary Jenga, as I call it. How many sticks can they pull out in the form of more tightening and more rate hikes before the whole thing comes down?
Yeah.
And that tower's teetering a little bit right now.
Yeah, I think you're right. The writing's on the wall. You don't really hear a lot of stories here giving us expectations for hope or prosperity right now. So the reality is we need something to change. And that's why we need to be making these informed decisions and be aware of these geopolitical events that keep occurring that do hit home to us. They do impact our budget. They do impact how much we could put in our grocery carts. And these are the type of things that allow us to be better prepared for what's coming.
Yes, and look, I don't want to paint a completely gloomy picture, but I think what we're going to need to have is very different leadership, I must say, than what we have right now. We need to have leadership that recognizes that this is crunch time, that we need to have a crash course emergency plan as a country, asking the serious question: where are we going to get this copper? Where are we going to get this cobalt? Where are we going to get this helium? There's been times, I don't know if you realize this, folks, in the last year or so, there's been times since Russia cut off helium exports as part of this tit for tat sanctions thing. You couldn't go to a dollar store in some places and get your kid balloons for their birthday because there was no helium to put in them. So look, we've put ourselves over a long time in a very, very vulnerable place. And we are not waking up nearly fast enough to the idea and the reality, the growing reality, that we're going to have to fend for ourselves. We cannot expect that we are going to use, our dwindling superiority, but still some superiority financially on the planet, our military or anything else, to beg, borrow, buy, steal, cajole, or cheat people out of anything. We can't have situations where the president makes a deal for cobalt with the Democratic Republic of the Congo, where the cobalt is mined by 10 and 12-year-old kids in mud and chemicals up to their neck, and tell people in the state of Minnesota here that they can't mine it here. That's not going to fly very long. We're going to be in a world of hurt when all of a sudden, even Canada, a reliable ally, the best one probably that we have in relative terms, they're not going to just sell stuff to the U.S. There's companies there that are going to sell things to Europe, to China, and other countries. So we better realize real fast that we need a crash course in figuring out how to fend for ourselves. And it's, energy and everything else, Patrick, we're going to go through a lot of pain until we finally come to our senses and realize that the world is changing. And, we can't bomb everybody into submission anymore to do what we want. So we better figure out how to do these things for ourselves.
Chris, you kind of said something that was a huge eye opener for me. I never even considered this before, what you just said about cobalt and the Congo. So, man, I'm going to have to write that down, and we'll have to talk some more about that, because a whole nother side of the story that I never even considered. And just thanks for bringing that to our attention as we go through this. This is something I want to be more aware of. I appreciate you bringing that to my attention.
Well, look, this country has been, and I love this country. I'm an American by birth. I'm not going to run away tomorrow and become an expat someplace. I'm here for the duration, for better or worse. I got a lot of kids and grandkids in this country. I don't want to leave too. But listen, there have been a lot of ways in which we've taken a lot of things for granted because we have been the world's cheap superpower and the center of the economic universe and financial universe basically since the end of the Second World War, and that has changed. You're seeing in a lot of countries. I mean, the Congo and the conditions under which things are mined there is deplorable, and it's been outlawed in most places. But even where you've got somewhat better conditions, look at one by one. Look at the South American nations. Look at a lot of the nations in Africa, elsewhere, that they want a better share of their resources. And the days are over where we can go into a country because we're bigger and tougher than they are and, quote, buy, resources and leave the locals with crumbs. And that's one of the reasons why this whole idea that, we're going to see the Fed succeed in bringing inflation back down, that's not going to happen. You've got shortages, years of underinvestment and underdevelopment, and local people in all these developing nations that want a bigger slice of what they deserve for their resources. And you combine all those things together, resources are no longer going to be cheap going forward. There's not enough of them. We've got a growing global population that, aside from all of the green stuff and all of this, laudable goals of cleaning up the planet, which we all need to do, even apart from that, you've got people in a developing world don't have running water. They don't have a good local infrastructure of things. They don't have highways. They don't have schools. And you're talking about all kinds of resources to build these things up too. And so disproportionately going forward, it's why, even though the timing isn't perfect for every single commodity, and I still think gold included, though I'm long-term bullish, the fact is that going forward, we have, I think, in some ways in the last year, led by energy, started a secular bull market for commodities, which for the first time in a very, very, very long time will outperform financial assets. So you'll see the stock market maybe mark time. You're not going to, the days of closing your eyes and buying some, quote, safe exchange traded fund, some balanced stock and bond fund, that's done.
Yeah, that is the upside to this. When I look at this economy and when I'm talking to my wife about this, she kind of asked me a question. She goes, "Hey, babe, what are we going to do like if we can't access our money?" I said, we've been really planning for this for a while. I let her know we've had a plan. We've stuck with our plan. As long as we don't have a ton of debt in the system, we're not feeling like we're burdened and enslaved to anybody, and we can provide for our family's basic necessities. And if Bitcoin or silver or gold happen to skyrocket because the dollar is tanking, that doesn't really impact me as much. So these are the things you can do to prepare, because if these days get worse, if things get a little bit more hard for the economy to meet their basic needs, the value that you'll have in some of these hard assets like gold or silver are going to help you out.
It will. And I would go even beyond that. Ask yourself, what can people barter with? What can you store? I've got an old friend of mine, this is going back a lot of years, Patrick, in upstate New York. He had a small farm. He had a couple of outbuildings on his farm. He had them full of hammers, nails, other hand tools, boxes of toilet paper wrapped so the mice and whatnot couldn't get in there. You name it. He had all kinds of stuff like that. He had garden seeds. He had canned foods and things like that. So yes, silver and gold are great for that, but don't shun other things. Everybody's got their own circumstances. And as much as I'm a bull on gold and silver, both, at least, certainly philosophically, I used to like to annoy some of my gold bug friends by, they're always touting gold, in times of crisis. Say, yeah, that's got a time and its place. But I'll tell you what, you stock up on gold, I'll stock up on whiskey and tobacco. And if everything goes down the toilet, we'll see who can barter the easiest. And I bet you it's me.
I'd like to enter my name into the hat. I've created man packs, which basically it's feminine products and chocolate. And I think that will go very well. I'll trade much higher than whiskey. At that time of month, I think I'm going to win.
So, yeah, I mean, stock up on things that you can use to barter with, that you can use yourself, in a pinch. And aside from that, look, I think that we all talk about Wall Street, Patrick, and just getting stupid in recent years with all of this free money and doing stuff that made no economic sense, but everybody felt bulletproof because the Fed had their back and the Fed was guaranteeing everybody's bets. Well, the Fed has pulled the rug out from under you now. And so, it's not going to go well in the years ahead of us. So by the same token, a lot of Americans have come largely through the abuse of credit, using too much, again, because that was made too easy. A lot of people live beyond their means. So one of the many investment themes I talk to people about is going forward, buy needs and sell wants, generally speaking. The things that people need that you can't do without. One of my favorite statistics is that, and this included some commodities, of course, and commodity related stocks, Patrick, but the very worst time ever in history to buy stocks was in the fall of 1929. And from the stock market's peak in September of that year until the bottom in April of 1932, the major stock indices led by the Dow Jones average dropped 89%. In value. We had a depression and all that kind of stuff. Yet during that same time, 1 out of 3 public companies were higher in price than where they started. And so one of our challenges today is to find that 1 out of 3 or maybe 1 out of 2 going forward that have got a medical breakthrough, commodities that are in short supply that we just can't do without, new technologies, grocers that have better profit margins than their rivals, whatever the case may be. There's always a story someplace, like the circus clown on CNBC, Jim Cramer, always says there's always a bull market someplace. Okay. And that is true. That is true. We just need to figure out how this is going to be a moving and evolving target as, again, between the great stagflation and this move away, from globalization and toward a multipolar world, the rules have all changed. And look, we can figure out where the roads lead to some extent. We just have to do it, and that's certainly not going to be done by thinking, okay, well, the Fed has to do this, or it's going to be like this episode back then. A lot of this is all brand new.
Yeah, I think that's a great place to even transition and end on, because when we understand that this new form of war, as you described about in the beginning, this different style of tactical warfare here with our credit, with our dollar valuation, with all of the values in the SDR, it's kind of, you said it, the cleanest shirt in the dirty laundry pile. I like to say it's the nicest smelling turd in the pot. But the reality is we understand that this may not be the easiest time here, but the goal is to identify what's going to truly have value based on the needs, as you talked about, not the wants. We really need these precious minerals and these precious resources. They're in limited supply, and we need it just as much as these other developing nations need it, some of which, you're right, don't even have their basic needs met yet. So I think you have such a great global perspective, and it was just a pleasure having you on today, Chris. Thanks so much for coming on.
My pleasure. Look forward to it again.